The following message is brought to you by Balsamiq. Balsamiq have decided to support the SaaS district community by donating their sponsored airtime to some of our listeners. This episode is sponsored by Preppr, a visual planning and publishing tool of content on social media channels like Instagram, Facebook, and Twitter. With Preppr, you can also schedule and publish Instagram carousel posts on complete autopilot. The product is available on both desktop and mobile platforms. And they even offer a 10-day free trial to try it out before even signing up. If you're looking to save more time and automate your Instagram scheduling for the entire month, make sure to visit Preppr.com. If you'd like to receive a promo code for Balsamiq, or even just thank the folks at Balsamiq for supporting our community, please check out our show notes where we include a link to that promo code specifically for the SaaS district community. Thank you all. Hello, everyone. This is your host, Akil Jabbar, and welcome back to another episode of SaaS District. In today's episode, we'll be talking about how bootstrapping your SaaS company from $0 to $3 million in ARR in less than 2 years. Today, we have our guest, Ankit, joining us. Ankit is the co-founder of Appitsimple Infotek, CallHippo, and SoftwareSuggest. He's an experienced entrepreneur, marketing leader, salesman, and head of growth. Most notably, Ankit has fully bootstrapped his first startup from concept to the 3 million ARR and profitable in less than 2 years. So welcome, Ankit. Glad to have you on our show today.
Yeah. Hi, Akil. Thank you for having me here.
Yeah, no worries. So for those of you who don't know your background, can you tell us a little bit about your entrepreneurial story of how you decided to build your first venture, which I think was SoftwareSuggest, and what was the problem you were looking to solve? I think that was back in 2014.
So in 2014, I was trying to find a software for my father's pharma company. So my father runs a pharma company, and it took me about 3 years to find the right software. The first year, we actually thought we'll build a software. We hired some engineers, and we outsourced it as a service contract, and that did not work well. We realized that building a software is not a very smart thing to do. The second year, we found a vendor, and the quality of that software was not very good. I mean, we had to shell that project in 3 to 4 months' time. There were a lot of issues. There were a lot of bugs which were there in the software. It was only in the third year we found the right software. So this process had actually started in 2010 and finished in 2013. And that's when I realized that there's a need of a marketplace which could help people find the right software. Give them feedbacks and reviews about software vendors. And that's how SoftwareSuggest came into existence. To add to my background, I'll add here that because you talked about my background, I do not have any engineering background, and even today the company does not have any tech co-founder as such. But yeah, we are still created a tech company with I think we a 160 people tech company without a tech co-founder.
So were you working at a job at the time, and so you were helping your dad build find some SaaS companies? You realize you need to solve an own problem of yourself, and you decide to go and build it. What was that process? Were you working full time and started doing it on the side? Did you just say I'm going to go all in and fire some engineers to build it, or how did that process look like?
Yeah, so I was working full time, but the entire time to market for this product was about 45 days. The first version was in the market in about 26-27 days, and the complete version was in the market on about, I still remember the date. It was 18th of February. We were in the market in 2014, and we started engineering on January around 1st of January 2014. We started engineering. I hired a couple of engineers. Trusted them to do good job. I mean, I did not. The lead engineer is still with us. He has been with the organization for about 6.5 years now. I trusted them with taking the right decisions and taking the right calls, and they could deliver in about 45 days time. Once it was in market, I continued working for the next 3 months, and after 4.5 months of putting the of ideation, I left the last organization and started working full time on this.
Wow. That's pretty quick, actually. How fast you can see that. That's the power of it, right? People think you need 6 months or a year to launch a product, but you launched in less than 45 days. You put the limit, you put the pressure, and they delivered. Did you intentionally make the decision to bootstrap at the time? Was it just because you had the money in the account, you could afford to pay these engineers for 45 days, or did you consider saying, hey, like this is a good idea, maybe I can go out and raise some external capital to really help this company grow?
So we did not really invest a lot of money in this product. The entire investment which I made was of $10,000. I had actually accounted for $15,000 to be invested in the company, but so that was my saving of $15,000. But we did not spend 15. So I thought that if I reach $15,000 and I am not able to become cash flow positive, I will close down the startup and go back to my work. But all I used was $10,000. And I didn't get the. Can you come again to the other question?
Yeah, like what did you have that thought in your mind at the time? Okay, so 10, 15,000. Was there a thought of saying, oh, I need to go raise 100, 200,000, or was it not even an option?
Yeah. So with respect to bootstrapping, so I never could understand. And still today I am not able to understand how one can spend $100 to get $50 of revenue back. So I have a lot of mentors in the industry now who have raised $100 and $200, and they still and some of them who have actually done a good exit also wonder why the investor gave them money and why they were spending $100 to get $50 of revenue back. So that is something which I have not been able to accept even now, and that is why we have kept Bootstrap. We as an organization, or we as a team, like an organization which is cash flow positive, which is sustainable, and we think if we invest $1 of revenue, if we invest $1, we should get at least 1.2 back in revenues. And because of that philosophy, we have been bootstrapped, and we have not tried to raise serious funds.
So that's not bad. So you're saying you're putting $1 in, and you're hoping your return is 1.2. So your LTV to CAC is 1.2. So generally, I think what most people like is 3 to 1, 5 to 1. If you can get that, then it's when you say, hey, give me $1 million, I'm going to make that into 5 million right away. Once you have that formula kind of narrowed down, right? But I think one thing you also have on top of that is you're based in India, right? What city are you in?
Sorry, our operations are out of India.
Mm-hmm.
In Ahmedabad.
In Ahmedabad? Okay. So, I mean, look, if you look at the cost, right? So, $10,000 to build a solid company, or, at least a solid product. To do that I guess the question there was, were you paying the engineers, a salary, or were you just saying, here's like a flat budget, 15, or, you try to come under that within that time period? Because, you try to do that in San Francisco, it's going to cost you 10 times that much, right?
Yes. So that was one. That was a cost advantage which we had. In fact, a lot of Indian companies like Freshdesk and Zoho has a similar cost advantage.
Yeah.
We were paying our engineers, and we were paying them decent salaries, but we were not paying them complete salaries. We paid them some salaries in form of equities, not hard cash. A couple of my initial team members are really rich. We plan to do an exit of the organization, and I don't plan to run this organization for all my life. I understand that we'll have to exit the organization at one point, and then most of my early engineers are going to make good money, and they will be rich. So even by US standard, not just Indian standard, they will be rich even by US standards. So yes, not all the engineers were paid, but not their 100% salaries. They were paid some part in equities.
Nice. So I guess they're cash rich right now, and at some point they'll realize the upside of the risk they took. Yeah. Cool. So in 2017, so just over 2 years ago, you decided to also launch a new company, CallHippo, which is the one now we're talking about. So about 2 years, about 3 million in ARR. What was your decision reason for the new business, launching this versus just like, doubling down, focusing and growing the first venture SoftwareSuggest, which was growing at the time, right?
So if you look at most bootstrap organization will have multiple products. Even Basecamp created multiple products some years back. Then they closed those products after Slack came in, and there was a lot of competition. They closed those products. And I think the reason for doing this is, as bootstrap organizations, we don't want all our eggs in the same basket. We want to divide our risk or reduce our risk by creating different products. That is why we created CallHippo in 2017. We thought it was getting too risky for us. We did not have venture funded. We were not venture funded. We did not have a lot of money in our bank. We did not have an opportunity to go without revenues for a couple of months. So we thought, let's create another product. And by this time, we could understand SaaS very well. After running SoftwareSuggest for 3 years, we could understand SaaS very well. So we said, let's create another product. So we reduce our risk. We understood the impact of the actions or the decision which we took in 2017 when Corona hit. In Corona, one of our product took decent hit in revenues, but so SoftwareSuggest took a little bit hit in revenue, but CallHippo did very well. Our revenue increased in CallHippo, and overall we could manage our revenues. In fact, we could grow our revenues even in Corona, and it helped us sail through. So I think So this is why we decided to create two products to reduce our risk as an organization.
Makes sense. So just to mitigate there. So now you said you invested about 10K initially on developing SoftwareSuggest. With
Right.
CallHippo, do you remember how much you invested there, and was there any different strategy there?
CallHippo, so SoftwareSuggest was already giving us revenues. It was cash flow positive. We invested about 40K in building CallHippo.
Okay.
Before we turned positive.
Got it. So that was just because of the complexity of it versus SoftwareSuggest, right? Of the technical, obviously you had the money as well to
we obviously had the money.
A little bit more functions and more features.
Yeah, we had the money. We could pay money now. So earlier we did not have money. We could not pay money. Now we had money, so we spent a little more money. We did not give out equity this time.
Nice, smart. And what was your strategy to minimize that payback period, and how long did it take to earn back your initial acquisition cost, so that 40K, either for SoftwareSuggest and let's talk about both, kind of both scenarios.
So we have always been trying to become cash flow positive as soon as possible. When we were running SoftwareSuggest, we were cash flow positive in about a year's time. We started SoftwareSuggest in January 2014, and January 2015 we were cash flow positive. Even when creating CallHippo, we had a deadline with us. We started CallHippo in January 2017, and we decided that if we don't become cash flow positive by December 2017, we'll close down that product. So even on the very first day, we had a very clear timeline. We did not become cash flow positive in December 2017, but March 2018 we were cash flow positive. In December 2017, we could see that we are moving towards cash flow positive, being a cash flow positive company, and that's how we are. And once you're cash flow positive, there is a growth trajectory, and you can predict how long it will take to get the cash back. So with respect to SoftwareSuggest, or CallHippo, I don't remember when we got the funds back, but we had a very clear 1 year cash flow positive target, and in both the products we could achieve that.
Nice. And then looking back now, when you first built SoftwareSuggest and then you applied a lot of the learnings to CallHippo, do you think it was the most effective strategy, or would you have approached it differently on how you started SoftwareSuggest the first time?
SoftwareSuggest was my first startup. I told you I am a non-tech founder. I did not understand anything about technology. In fact, I did not understand anything about angel investment and VCs. I was completely blank. But 3 years of SoftwareSuggest actually gave us a lot of experience. I did not know what search engine optimization is when I started SoftwareSuggest. So it was almost like, I was running the startup. I was running SoftwareSuggest for about 6 months, and there was no traffic on the website. No Google Analytics was installed. I called up a friend and I told him that, boss, nothing is happening. I don't know why there is no revenue. And this friend told us that, have you done search engine optimization? I said, what is search engine optimization? I don't know anything about it. And then he explained me there was something called as Web CEO then, and he told me go to Web CEO, try Web CEO out. And then he told me there's something called as Google Analytics. You should install Google Analytics on your website. After that call, I locked myself in a room for about 3 days and learned everything about search engine optimization. So I read almost everything which Neel Patel had written, and that's where our real journey started. And then we became one of the best organizations in search engine optimization. This entire learning was actually applied to CallHippo. For the initial 1 year, my payback period in CallHippo was 2 months. So every time I was getting a customer, I was getting my money back in 2 months, all costs weighted down.
Nice.
So because you asked me this question, what were the learnings? The major learning was of which we took from SoftwareSuggest was of search engine optimization, how to market the product, how do you reach out to the customers, and how do you get revenues, where all the learnings from SoftwareSuggest which you put in CallHippo. It actually helped us build the product faster. It helped us break even faster.
Makes sense. So Now, would you say most of your growth strategy, whether now or before, was mainly driven by SEO? Is that how you were, focusing most of your marketing budget?
Yeah, so for the last 6.5 years, we have been more majorly focused. I'll not say 6.5 years. For the first 6 months, we were not SEO driven, but after that, we have mostly been SEO driven organization. We focus a lot on search engine optimization, getting traffic from search engine optimization. Uh, that has helped us keep our cost low, and because our cost has been low, we have been able to acquire customer. uh, we have been able to get a better payback period for customers. It is very recently that we have started advertising on Google. We have started spending money on LinkedIn. Uh, we have started outreach campaigns, email outreach campaigns, and now we have started exploring other methods of lead generation. Uh, but primarily, this organization has been SEO driven. Even after all these methods, about 70 to 80% of my revenue comes from search engine optimization.
Very nice. So, like you said, the 45 days to build a product. Between the 45 days and the 6 months when you first started SEO, what were you doing then? Were you, making phone calls? Were you doing cold emails, or how were you trying to get clients then, or were you not focusing on that at all?
So we were actually trying to reach companies out using cold emails and trying to see if companies convert. But unfortunately, no company converted. Then we did not have any traffic on the website, and if we did not have any traffic on the website, it did not make any sense for any software company to pay us and advertise on SoftwareSuggest. It was only after we started doing search engine optimization. It took us around 3 months to do search engine optimization and start ranking on Google. Once we started ranking on Google, then it was not very difficult. A lot of companies started approaching us for advertising on SoftwareSuggest. So once we had traffic, it was less of cold outreach and it was more of organizations coming to us to advertise on the platform.
Nice. So as a SaaS owner now, you have 2 startups running. What are the key metrics that you monitor on a daily basis that you're really paying attention to? Are you looking at revenue, growth rate, user churn, CAC, LTV? What's really important to you that you look on every day?
Okay, so as a founder or as the CEO, I've gone out of daily metrics. I'm more on a weekly matrix, and even for weekly metrics, I don't try to follow hard numbers like revenue and churn. Those happen in our monthly and quarterly meetings. I have leaders who take care of that, who are running after these numbers and who understand these numbers well. As the CEO founder, I am more focused on my customer experience. So NPS is one matrix which I try to follow every week, and I try and understand. So I try and read through each and every comment my customers give us in NPS. I try to understand what tickets have been raised by customers, why those tickets have been raised. In fact, my support team is supposed to give us 3 user experience issues every week. So even if a user has not complained it or have not reported it actively, the team is supposed to give 3 user experience issues, and we try to solve that regularly. So when leading the organization as the CEO, I'm more focused on long-term matrices, which will help the organization grow in the longer run than revenues, which are more shorter run. I think 1 month revenue, 2 months revenue, and quarters revenue is. I have good leaders now who achieve those revenues. I don't have to worry about those revenues. I'm more worried about what happens after 1 year or what happens after 2 years.
Makes sense. So I think, just for our audience, NPS, that's a net promoter score, which is usually a number from 0 to 10, which tells you how happy your customers are. Can you share what your average number is and right now in terms of your NPS score?
So we are at 6.5 as of now. We were earlier a little lower, and in telephony it is a little difficult. So telephony depends upon a number of factors like phone quality and hardware quality. So getting a good number is a little difficult. We were a little lower in NPS a year back. We worked around it and we increased our NPS to 6.5 now.
Nice, very nice. What is so if there's another bootstrapped SaaS startup in the early stages, what is a number one metric to focus on to maintain profitability while still maintaining growth? So going back, what were you really paying attention to in the early stages, and why?
So in the early stages, we were very focused about return on investment. Now we are not that, we are still focused on return on investment, but we do a lot of experiments now. But in the early stage, I was very focused about return on investment. I would not do an experiment until I understand how the experiment is going to give my money back. So so we will do very controlled experiments. We will spend less on those experiments, and unless we start understanding those experiments very well, and unless we are sure that this experiment is going to give us our money back in 6 months, 3 months, whatever time, we will not scale those experiments. I think as a bootstrap organization, you are so there's a lot of talk in funded organizations. They run multiple experiments, and they really don't care if 90 out of 100 experiments they run go bad. And in fact, VCs and investors give them money to run those experiments. The objective of having that much of money is to run hundreds of parallel experiments, and even if those 10 experiments go good, the VC gets his money back. But when you are a bootstrap organization, you cannot run hundreds and hundreds of parallel experiments, which I think is a mistake a lot of bootstrap organizations do. You have to be very selective and very choosy about the experiment which you do. And even in those experiments, you have to be patient with those experiments. If you are not patient, and if you are running a number of experiments, you will run out of money very soon.
Right. Makes sense. So unlike a VC funded companies, they have plenty of cash to burn and test out. How else should a bootstrap, SaaS startup manage to structure their limited capital, whether it's, acquiring new clients, efficiently run expenses, such as sales and marketing and other costs to allow, still keeping growth, right? Like, how do you have to think about that? And where would you focus your energy then? Is it more product, or you focus on marketing?
Yeah, so I think product, people can build product. I think there are a lot of product there which have been built, but the founders have not been able to reach audience there. I think marketing is the most important thing. The founder should focus on marketing. They should focus on selling and getting the first customers, and getting the 10 customers, and getting the first 100 customers. Engineering can be managed. I'll not say engineering is easy, but engineering can be managed. As a founder, if I have to do it again, I will focus 70 to 80% of my efforts on getting my first dollar of revenue, then getting my 10th customer, and getting my 100th customer. I don't know why, but maybe because I'm in India, we have operations out of India. I think getting engineering resources is easier than getting a marketing and sales resource. If you have to control your cost, you can get a good engineering resource at a lower cost than getting a marketing and sales resource who can actually turn things, and you can actually sell, and you can actually generate good leads. So I think as a founder, you should spend your time there. It is a better return on your time.
Yeah, makes sense. So just kind of adding to that, when you're initially building a team, you're hiring for both critical and non-critical roles. How did you approach that? Because you I don't know if you've worked with this engineering team that you went to and said, "Hey, build this product," or was it just like, how do you assess that? Because I know if I'm based out of the US or Canada, I want to hire a team out of India or any other company. What's your thinking? How would you help them kind of work through that to make sure they get the good quality and deliver it?
So when we hire people, before that we are hiring continuously. We are currently a 180 team. 180 people team. And if anyone is looking out, please send us an email. Now coming to your question, we are very focused on HR rounds. So our interviews are more, or whenever I have a discussion, it is more about, are we connecting with that person? Do you see that person work for life? So we have a very clear policy that we don't work with anyone if I don't want to work with that person 20 years down the line. So every time we add a person to the team, all my team members, or even I am supposed to answer the question that, do you want to work with this person 20 years down the line? If there is a check there, we hire that person. If there is no check there, if I don't want to work with that person 20 years down the line, we don't hire that person. So this particular question has been our philosophy from the very first day. And I think because of that, we have team members who have been working with us for 6 years, 6.5 years. So the engineering lead of CallHippo has been with us for about 3.5 years now. In the last 3 years, his salaries have grown by about 10, 12 times from what he joined us. So if you ask me how and we follow this for critical, non-critical, both resource. Critical, it can be critical, it cannot be non-critical resource. But we make sure we try to answer one single question: do we want to work with this person 20 years down the line?
That's a very powerful question. I mean, the thing is, I mean, you are going to be working with them. These basically become part of your family. The issue is, I think, with that, just a question for you is that it could be very subjective, right? Because now you're really hiring based on personality, how they fit in. Yeah. Would you consider that more of like a cultural check than anything? And then you're leaving skills aside and, saying, okay, well, you have some skills, but, if we like you, maybe it's just that one person on the team that likes them, but maybe another person doesn't, or how are you looking at that?
So we have a very, very structured hiring process. So there is a technical round which happens with the HR, and only when the technical round is cleared by our recruit and talent team, it comes to us. And even when it comes to us, so a lot of team members are actually involved. So it is not just my decision. I get all my team members. We get all of our team members on the interview round or in the interview call, and then we have a very casual discussion with the person.
And so you've experienced, 3 different startup journeys. You now encounter different situation and numbers, but so far, one important part of the SaaS company is managing your user churn. I think I want to talk a little about that in order to maintain your MRR and growth, your growth budget and whatnot. How do you suggest Bootstrap, startups start dealing with that, and how do you approach, managing user churn?
So, Akhil, this is something which we learned very recently. CallHippo so we have very low user churn in SoftwareSuggest, customer churn in SoftwareSuggest. In SoftwareSuggest, we have companies who have been working with us for the last 6.5 years. Once they start, we hardly have customers in SoftwareSuggest who actually drop or stop advertising or stop working with us. We started facing this issue of churn in CallHippo. For the first 2 years, we were growing very fast and we never thought of churn. It was only in the last 6 months we started thinking about churn. And we realized that churn is a major concern for most B2B SaaS companies, and it needs to be controlled. So what we did was we went back to the blackboard and we started understanding what our ICP is. We started figuring out who were the customers who were sticking to us, what were the type of customers, what were the industries who were sticking to us for a longer period, which type of customers were giving us higher NPS, and we figured that out. And then we started building only for that segment of customers. In the initial days, we were going all out. We were telling anyone would come to us and we will say that we are building for you, and there is no one in the world. And I used to listen to interviews, and I used to listen to other founders who were very successful, and they will say that we are very focused and we are building for only these type of organization. And I would think that they were doing like 100 millions, 200 millions of revenue, but I was very stupid to think that those guys were not very smart, and I was the smartest one who was building for everyone and who was not telling no to any customer. But eventually, when churn started hitting us and we realized that churn is a serious problem, then I could actually understand and decode what they tried to say. 6 months back, we did this entire process, and now things have started looking much better for us. I mean, our churn numbers are going down.
Smart.
We are now almost hitting cash flow positive, net negative churn. We are almost reaching that. We have started telling no to a lot of customers. In fact, sometimes it happens that we tell no to a customer and they go and give us bad feedbacks on platforms like SoftwareSuggest, Capterra, and they even go to our Facebook page and give us bad feedbacks. But we are very clear about that we don't want people who don't fit ICP. I think that's the way to do. I mean, if I have to do it again, I will go back and I will just build for ICP. Even when I am zero revenue, I will try to figure out what my ICP is and I will try to build for ICP. With engineering standpoint, what we do is now how the ICP discovery has changed is that now we build features which are focused on these particular ICP. So we have a couple of features which are focused on these particular ICP. When you compare it with my competitors, you will not find those features in my competitor because my customers don't find that feature in my competitors or feature. They don't tend to churn out, and that's how we try to control our churn in this organization.
So interesting. I mean, at the early stages, I don't know if you want to say no, but okay, you defined the ICP. Are you really limiting yourself to one, or would you say, hey, build 3 or 4, maybe not everybody, but 3 or 4, target them. And then over time, once you kind of, see who's, higher value, you start eliminating the others. Is that probably a better way to look at it?
Yeah, I think you should do experiment with 3 or 4. We were actually selling to everyone. I mean, anyway, so I had my conversion rate from sign up to sales at about 35%. Then I was actually selling to everyone. We have now controlled it, and it has gone down to 15%. We are telling no, but earlier we were selling to everyone. Anyone wants, we will modify the product a little, or we will try to fit in their use case. So. You shouldn't sell to everyone. I mean, 3 or 4 use cases is good. You experiment with 3 or your use cases, then come down to 2 use case, then probably come down to 1 use case. That happens over a period of time. At the very outset, telling that I want to do only this particular use case and I don't want to touch any other use case will also not be smart. But going all out and telling everyone that I'm building for everyone is also not very smart.
Makes sense. So, last kind of question about the product side. So initially, trying to build a product, when you're a funded company, a lot of your time is there to perfect the product. Sometimes it takes 18 months before you even have a product, and you have that money there to back it. But as a bootstrap company, you don't have that kind of resources, right? You're struggling to manage that. If you're a bootstrap company, would you recommend only focus on, say, building an MVP quickly and then iterate along the way, or do you focus your efforts on, was that 45 days that you built, was that a perfect product, would you say, from the beginning? And do you say, like, I want all this and, deliver this in 45 days? Or was it like, just give me this enough to get started and then we'll build over time?
So as an organization, we have never focused on building a perfect product, and I don't think a perfect product exists. We have been a very MVP focused product. So what we'll do is we'll understand the timeline which we have. We'll fix a timeline that we need this product out in 3 months' time. And then we will work backwards. We'll first make a complete feature set, and we will think what is the best case scenario. We write that down, and then we say that, yes, if we build this best case scenario, will take 9 months or will take a year's time. Then we start removing things which are not needed in the best case scenario. We try to shorten time, and we come down. Then we do this step couple of times. So ultimately, what I tell my team is that what we do is an MVP of MVP. So we go out with a really light product. When we do experiments with our features, we are out in like 5 days time. We will build that feature and we will put it in the market. We'll do a lot of. We'll also do things like we do things like we put buttons in the product, and then we let the user do an action there. Click there, and then we tell the user that this feature is not there. If you want this feature, and if you think this feature is valuable, then talk to our product manager. So we'll do all those experiments. We avoid engineering. If someone comes with an idea, we will still use Google Forms. We'll tell the team member that let's experiment this with the Google form. We'll tell them call customers up and see if they really want it. We avoid engineering as much as possible. Even if the customer wants it, we'll go in for an MVP even today. See if the customer is really using it, and if they're using it, we keep building on this, adding one particular facet to it every release, and build things over time. So I'm a complete believer of MVP. I mean, I think building a complete product is not very smart unless and until you have lots of fun in your bank and you are doing something which is very innovative. I mean, your objective is to experiment and do that big experiment and see if it can be successful.
Yeah, makes sense. So if you had the time and resources today and were looking to launch a new startup, what industry would you focus on, and what markets are you most bullish about?
So as an industry, I love SaaS. I find it very interesting. I think there's a lot of opportunity in SaaS. So I will not go anywhere as an industry. I think for the next 15-20 years, I'm not going anywhere as an industry, and I'm sticking to stack. And even as a market, I think telephony is very. Telephony has not been explored properly. So what we are trying to do, and why we started CallHippo is another interesting thing. So I realized that there is a lot of automation which has been done around email marketing. So you will see companies like MailChimp, and then there is Intercom, then there is Drift, which has done a lot of work around email marketing. They have done a work around chat, but none of the organizations have actually worked around telephony. The only organization which I can think of which has done good work around telephony is Twilio, which has also done a work of which has also done a very basic work for engineers. So I think a lot can be done in telephony. There is a lot of automation which can be done in telephony. Gong has done some work around telephony where they are doing predictive analysis around sales calls and trying to see if your calls are going to end in a deal closure. But as such, I think telephony has not, and probably because it is not sexy. So telephony does not sound sexy. Building a bot probably sounds sexy, and doing something around marketing sounds very sexy. But because telephony is not very sexy, it is very complex. There's not much which has been done around it. I think there are lots and lots of things which can be done around telephony, automation in telephony, getting data analytics around telephony. And CallHippo as an organization cannot, I don't think we can doing even 1 or 2% of what needs to be done can be very big for us. So I think there's still that 99% which is left, and someone needs to do it. If I get another opportunity, when I exit CallHippo, I'll probably, and 5 years down, I'll probably go back to telephony and try to do something here.
Nice. So if anybody listening to this looking for some ideas, there's a big opportunity there waiting to get on.
Right.
Awesome. Thank you, Ankit. Really appreciate you jumping on today on SaaS District. How can our audience get in touch with you and learn more about what you're working on today?
So you can follow me on Twitter, which is Ankit Dudhwewala, or you can email me on my email address, which is ankit@callhippo.com.
Okay, awesome. Thank you so much. We'll add those links to the show notes, and I really appreciate you jumping on today. Thank you all for watching this episode and joining SaaS District today. Don't forget to like, subscribe, and hit the bell for future episodes where we interview top leaders in the SaaS industry. If you're a SaaS company looking to grow and unlock the true value of your business, get in touch with us at Horizon Capital, and myself or one of our consultants will provide a free assessment to help you get there and hit your goals. If you have any feedback or suggestions for this podcast, please comment down below and help us improve our content for you all. Thanks again, and see you on the next one.